Ladies and gentlemen, I would like to welcome you very warmly today to this presentation of an AI-driven crypto trading program on Binance, and it is called Polar Tensor. Polar Tensor started in April 2024 with $2 million. The founder and creator, the current CEO, invested that himself from private funds. The account is now 124 million US dollars, so in less than 2 years, an incredible increase. But this is proven by practically the blockchain through the Binance account, where all amounts are fully traceable. Here you can see the Binance account. You have 124,657,000 and so on, practically in US dollars here. Here you can also see the scale of what has been created. Here is another slide where you can see the performance of the last 6 months on the left side, for example. In the last 6 months, Polar Tensor has achieved a profit of 102.36%. So the capital has basically been doubled in 6 months. On the right side, you have the live trades. You can then see those in your back office. Here, of course, you have not only profits in green, but also losses. That is completely normal. There are also losses. But mainly profits are made here. And that is why these large sums come about. What is Polar Tensor? Polar Tensor is an AI system and trades crypto on Binance. There you pay almost no fees due to the scale, specifically due to the VIP9 status. And that is why this high-frequency trading works. What is that? The AI executes an average of 30,000 trades per day and trades from Monday to Friday from 8 to 2200. Specifically when institutional investors, but also private ones, are most active. One more thing I want to mention here is that the performance fee is usually somewhere between 20 and 50% of the profits, but overall, the average return, the net return for the investor, is between 3 and 5% weekly. So you can expect that on average 15-16% will come out on average. The development of this artificial intelligence system actually took place from 2018 onwards. And then in the year 2024, with the capital of the company owner, the CEO of $2 million, he then went on Binance, started trading, and achieved exactly these fantastic $124 million. Who is this founder? This is Felix Bick. He was born in Hamburg and also began his career at a German private bank in Hamburg. His path then led him to China, to Shanghai and Hong Kong, where he has been active for 25 years. In 2018, he and his team developed this trading software. Here you have another slide where you can see that the average monthly return was 22% since April 2024. Namely, returns fluctuate, of course, they range from 12 to 40%. Here you can see the bars below where these percentages are indicated at the top. If you want to get started here, you can use this link. You can register via this link. It is very simple. The minimum investment amount is $100. So you can start with $100 and then, if you want, increase it or exit. Importantly, profits are credited every Friday and you can withdraw both profits and capital at any time. That is sensational. It is unique that you can exit at any time. So there is no lock-in of your capital. But what is also interesting is that there is a button on the dashboard called the Auto Reinvest button. If you click it, then all profits and the capital are continuously reinvested, creating a compound interest effect. Albert Einstein already said, when asked what the greatest power in the universe is, he said compound interest. And he is right. A small example. If you start with $100 and always reinvest the money through this auto invest button, you do not need to do anything. Not even check the account. You look at it after a year and you have, if these returns continue to be as consistent as they have been, and why should that not be the case? After all, there is more and more trading, more and more people are entering the crypto market. then after 1 year, you have approximately 10 times the amount. That is $1,000. If you continue that for the next year, then you have another tenfold amount in another year. And that is then $10,000. If you have that for a third year, what do you have then? $100,000, which is 10 times the amount of $10,000. Now, one might say that sounds too good to be true, but of course, there is also a risk associated with the investment here. There is risk everywhere. If you keep your money in a bank, in my opinion, the risk is even greater. What if the bank goes bust? And how many banks have already gone bankrupt? And what's the value then of this 100,000 euro security, practically state security, this deposit insurance through the deposit guarantee fund? But please, the deposit guarantee fund has no money. If a major bank goes bust, then that cannot be paid out, no matter what is being said here. So I would say this polar tensor actually belongs in every portfolio. It is, if it continues as it has so far. And why shouldn't that be the case? A huge thing for your portfolio, for your assets, for your financial success. And if it goes wrong and you, for example, put in $100 now or even $1,000, then you have a manageable capital investment. Of course, it should be added if you can also use this tactic. You invest, take out the initial capital, leave the profit in, and then if something goes wrong, you have no capital loss. So, as I said, get involved. If you invest via this link shown here and also listed in the video description, then you'll be part of my structure and I'll support you with advice and action on all questions and help you to be as successful as possible here. I thank you for your being here, for listening, and wish you a nice day. Ciao.